Welcome to another edition of the Symmetry Spotlight, where I break down financial topics and common investment questions with the goal of helping you make sense of the world of finance. This month's topic, we're going to be talking about the difference between the traditional IRA and the Roth IRA. So quite often we get questions from clients asking us what's the difference between these two accounts and which one makes the most sense for them. And the main differentiator between the two, it really comes down to taxes, but there are also a handful of rules that you need to understand to make sure that you're using the right type of account for your situation. First off, let's start with the traditional IRA. The main benefit of a traditional IRA is the potential for you to take a tax deduction on the contributions that you're making into the account. So for 2025, you can contribute up to $7,000 to an IRA if you're under age 50 and up to $8,000 if you're over age 50. But whether or not you can actually deduct your IRA contributions, that depends on the criteria that's set forth by the IRS. So if you're looking for some reading material, you can find all of the criteria on the IRS's website. Otherwise, I would recommend speaking to myself or a tax professional to determine the eligibility for these tax deductions. So if you are able to deduct your IRA contributions, then obviously that's a great, current year tax saving strategy. Plus you're saving for retirement at the same time, which is always a good thing. The caveat is that the distributions that you take from your traditional IRA, those are taxed as ordinary income, and they could be subject to an additional 10% penalty if you take withdrawals before age 59 and a half. Also, traditional IRAs are generally subject to required minimum distributions, or we call them RMDs for short. And those typically kick in at age 73 or age 75, depending on what year you were born. In next month's video, I plan to break down all the ins and outs of the required minimum distribution, so stay tuned for more information on those. Next, we have the Roth IRA. So the Roth IRA has the same contribution limits as a traditional IRA. So again, that's $7,000 if you're under age 50 and $8,000 if you're over age 50. But contributions to a Roth IRA, those are made with after-tax dollars, which in simpler terms means you are not allowed to deduct the contributions that you make to your Roth IRA. The benefit of a Roth IRA is that all of your withdrawals come out tax-free as long as you satisfy the holding requirement rules. So it's not often that we get to use that word tax-free, which makes these accounts a very popular choice for investors who are looking to set themselves up for the potential for tax-free income in retirement. But just like the traditional IRA, a Roth IRA has eligibility requirements. So again, you can visit the IRS's website to learn more, or you can work with a professional to determine if you meet all the eligibility requirements in order to contribute to a Roth IRA. Unlike a traditional IRA, your Roth IRA is not subject to required minimum distributions. So you will not be required to take money out at your required distribution age like you would with a traditional IRA account. So how do you decide between the two of them? It mostly boils down to taxes, and not just your current taxes, but also your expectations for your future taxes too. So if you would really benefit from the tax deduction right now, or if you think your tax bracket will be lower in retirement, then the traditional IRA could make more sense for you. But if you don't need the tax deductions now, or you would prefer to have that tax-free pool of money in retirement, then the Roth IRA could make the more sense for you. Or sometimes investors do both. So you're allowed to spread your contributions among both types of accounts as long as you don't go over those annual contribution limits. So for example, if you're under age 50, you could put $4,000 into a traditional IRA, and the remaining $3,000 could go into a Roth IRA, possibly getting the benefits of both type of accounts. In the end, everyone's situation is unique, and as I said earlier, I recommend you speak to either myself or a tax professional just to make sure that you understand all of the rules associated with these accounts and help determine which account or which combination of accounts is best for you. So if you have any questions, please give me a call or send me an email. Otherwise, I look forward to talking with you again soon.